Hello everybody, this is US 500 chat. Okay, so let's go into it. Let me put my phone horizontally. Okay, so let's go now to our monthly chart. Okay, so what happened on monthly? We had a big rejection. Once it hit this other block on the monthly at 3,491.97. Okay, then we had this other block here that was hit, and then we had the rejection up into this bearish order block here. Okay, now let's see. Initially speaking, it's been bearish this whole entire year, so let's check our weekly. What was there? The same thing I was talking about, the bearish order block weekly that was hit on the week, basically the week here. Didn't really reach the opening price, and it didn't. So we just rejected here, came back down, went down, then hit this initially. Hit this, rejected, and this is the buy that we saw entered about 50% of it, non-rejected. So what are we assuming now? We're assuming for lower prices. Let's go to our, where do we go? We're going to go now to our daily chart. Our daily chart, once we hit this area here, what is this? Bullish order block. Okay, bullish order block. Where do we have a point where there was inefficiency? Inefficiency occurred in this green zone here, and that's a fair value gap. We had a fair value gap, complete fill, and a rejection towards the downside. So what are we expecting? We're expecting it to have a bullish tendency for a little bit until a certain point in time here. Seeing what's happening. So we have this day here being bullish, and we have, what do we call this? Change the color as well here. Okay, so that's what we call the low of the bearish order block. Okay, so we're going to reject heading above it, and inside there on our opening price, what are we seeing? We're seeing this fair value gap inside there. This fair value gap that's inside there is where this price is definitely and most likely going to go and fill. We go now on our 30-minute chart. Let's try our 30-minute chart. Yes, most likely that's where we're going to see a rejection to the downside. Yes, so after it goes above that, after it goes in here we also have this for our fair value gap here. We can get a fill inside there and get a rejection coming to clear this low here, or even this can to go above here, fill this, reject, even here, down to the downside there, clear all this, and then you have your selling opportunity. Most likely you come out here, right here, leave this can be another rejection here, and this also, and this one as well. All these are potential liquidity points that are going to be taken during the week, or maybe even next week. So okay, so initially your trade should just end here at 36.95.81. That's it. When you sell, don't look for more. Okay, so basically we're expecting it to enter here, balance this whole price range here completely, explode to the downside here, and you're out. And this is a lot of pips for people. So this is my analysis for the US 500. US 100 most likely the same, but you can check them out, you can compare the two, which is very good for your analysis, especially when you're using a PC. Make sure you just analyze everything together, make sure it goes well hand in hand. You're seeing SMT divergence, all those things that are necessary for you to take in the trade. And most people, I could say, if you were to enter here, if you were to enter in this fair value gap right here, but wait for it at your New York opening, wait for it to react in there, and then show a significant point of rejection. That rejection, you should see it going to the downside. Once you see it going to the downside, find your entry in there, and then you go with your entry. But if you are to enter on these higher time frames, if this was your fair value gap of entry, stop loss supposed to be here, just there. That's where your stop loss should be, and then you wait. But entering prematurely is not advised here, so you just wait for the opening, New York opening, reacts in there, explodes to the downside. sp500 is a good asset to trade. So yeah, this is my thoughts for the S&P.